India's MSMEs, enabling ideas to become enterprises and entrepreneurs to become leaders. Today, over 6.3 million MSMEs in India are growing, learning, and expanding with ISFA. With 1,200 plus live events every year and more than 1,500 industry enablers as partners, ISFA is a dynamic network of opportunity. We're shaping India's franchise future with fairness, transparency, and trust. At ISFA, we connect ambitious entrepreneurs to top global and Indian franchise brands. Whether you're starting out or scaling up, ISFA gives you the platform to grow. With funding support, skill-building programs, and international trade access, we help you unlock your potential. Small businesses don't stay small for long with ISFA. They become tomorrow's success stories. So, take the leap. Join ISFA today. Let's build the future of entrepreneurship together.
Good afternoon to all our distinguished speakers and participants. On behalf of Indian Small Business and Franchise Association ISFA, it is my pleasure to welcome you to the national webinar on recent development in GST. As the GST framework continues to evolve, it brings significant reforms aimed to enhancing transparency, strengthening digital compliance, and simplifying administrative process. These developments are reshaping the tax landscape for businesses, professionals, and policymakers alike. Today's session provides an excellent opportunity for us to understand these changes, discuss their implications, and exchange insights that will help us navigating the shifting GST ecosystem with greater clarity and confidence. Today, in our esteemed speakers, we have Ms. Prachi Arora from Prakash Sachin and Company. We have Ms. Parul Agrawal from PMA and Associates. We have Ms. Anjalika Chopra and Mr. Puneet Chopra from the Chopra and Chopra Associates. Thank you for joining us today, and we look forward to an engaging and informative session ahead. Now I over to the Prachi ji to start the session with his topic, and I also request to the participant, please actively participate in the session. Start typing your questions and query in the Q&A box. We will take all the questions at the end of the session. Over to you, Prachi ji.
Thank you, Akshadji. Good afternoon to everyone present here. My topic for the webinar is one of the most significant and institutional developments under GST, the constitution and the operationalization of the GST Appellate Tribunal, that is the GST. While we all are aware that the GST landscape has significantly evolved in terms of the compliance and technology, one major gap in the ecosystem has been the absence of the Appellate Tribunal. Today, we'll try to understand why GST matters, what has changed, how tribunal is structured, and what taxpayers practically need to prepare for. My aim would be to simplify the law, not just to read it here, and how it is going to affect the real world implications. We'll try to understand that. So let me begin with a simple reality. In 2017, in 2017, taxpayers who lost at the appellate authority stage had no option but to approach to high courts, even for the factual disputes. And high courts, as we all know, were already overburdened. This led to three major problems: huge delays, inconsistent decisions, and working capital stuck for years. GST fills this structural gap. It will now act as the final fact-finding authority, which means high courts will only deal with the substantial questions of law and not to the factual disputes. So let's briefly look at where the GST fits into the overall system. GST has the three-tier redressal mechanism. First is the adjudicating authority, the first level of the appeals. Second is the GSTAT. After that, the matter goes to High Court and the Supreme Court. Although we have GSTAT in the law right from 2017 under Section 109, but tribunal was effectively not operational until its formal constitution on 24th of September 2025. Uh, in 2019, Madras High Court struck down the earlier composition of the GSTAT because it gave excessive control to the executive. Judicial members were in minority. That violated the doctrine of separation of powers. Now we have the formally constituted bench. It is effective from 24th of September 2025, as we are all aware. If I talk about the constitutional and the legal foundation, Article 279A forms the constitutional bedrock by GST Council for the establishment of GSTAT, and Section 109 to Section 116 comprehensively covers all the matters relating to appointment, qualification, procedure for the GSTAT, and its procedural framework is entirely covered there. Let's discuss them one by one in detail. Section 109 talks about the constitution of the appellate tribunal and its benches. Tribunal is going to have 32 benches, one principal bench at New Delhi, and 31 state benches that have already been notified. If you can see, the constitution of the principal bench and the state bench is more or less similar. The only difference over here is that state bench is going to have two judicial members, one technical member and one technical member state. Whereas where it differs is that the principal bench is going to be headed by the president. Coming to the matters that are going to be dealt, which matter to be taken up by the principal bench and which matters to be going to the state benches. Principal bench established at New Delhi will be taking the specific matters. If I have to give the thumb rule for this, there are going to be four parameters, I can say. First, if any issue involved is relating to the place of supply, the matter will go to the principal bench. Secondly, if there is a dispute which involves the identical question of law which is pending before two or more state benches, and the president is of the opinion that it is identical, then again it can be referred to the principal bench. Third situation would arise when it would have any issue relating to Section 14 or 14A, that is relating to online money gaming. And last but not the least, Section 20, that is the distribution of credit by ISD. If any of the four matters is concerned, the matter will directly lie before the principal bench in Delhi, else it will be taken up by the state benches within their jurisdiction. The next point to note over here is the monetary limit that is going to be decide whether it would be taken up by a single member bench or a division bench. So if the dispute involved does not exceed the amount of INR 50 lakhs and it does not involve any question of law, then it is going to be taken up by the single member bench, else the case lies with the division bench. A point from the president that he has already addressed in even before the commencement, that 90% of the orders would be taken up by the single member bench only, as the orders already issued by the appellate authorities, GST APL 04, most of them are below 50 lakhs, subject to the point that they doesn't involve any question of law. They would lie before a single member bench. Coming to some small subsections of 109, these are related to the procedural part, that any vacancies or defects in the composition of the GSTAT is not going to invalidate any proceedings, and the president may distribute the cases between the benches. Coming to the next section, Section 110 deals with qualification, appointment, and conditions of service for the president and the members. The tribunal's composition is now heavily judicially oriented, which was the main demand of the courts as it was struck down in 2019. The president has to be a former Supreme Court judge or Chief Justice of a High Court. Judicial members can be High Court judges or district judges with 10 years of experience, or advocates with 10 years experience in the indirect tax litigation experience. Technical members, both center and state, come from high-ranking IRS and state tax services with at least 25 years of service and 3 years of GST exposure. So overall, we have a balanced and credible mix of judicial and technical expertise. Coming to the next section, section 111, procedure before the appellate tribunal. It's important to note that GSTAT is not bound by the Code of Civil Procedure, but it must follow the principle of natural justice. So hearing here would be much more flexible, but it does have the powers of civil court for summons, affidavits, requisition, documents, and examination of witnesses. Adjournments here are going to be limited, that is maximum 3 per party, and that too with a reasonable cause. Orders are expected to be passed by a tribunal, if possible, within 1 year, and they need to be communicated electronically through the GST portal. The e-filing portal for all the filing of appeal there is going to be the gstat.gov.in, that is there. Now, the most important section, section 112, appeals to appellate tribunal. Appeals to appellate tribunal under section 107 against the orders passed under section 107 or 108 of the Act. The timeline there we have is the 3 months, and the cross objections needs to be filed within 45 days. There is no monetary limit for the taxpayer over here to which they can go to the GST. But yes, GST on its own can reject any appeal if it is less than 50,000 rupees. And as far as the filing part is concerned, there is going to be a minimum amount of 5,000 ranging to a maximum of 25,000 for filing the appeal with the GST. That is 1,000 per 1 lakh rupees. Yeah. Coming to the preconditions, under section 112 for filing the appeal, the taxpayer before filing appeal with the GST needs to discharge all of the admitted amount in the order. Along with that, 10% of the disputed amount subject to a maximum of 20 crore rupees as a pre-deposit mandated under section 107 subsection 6. A change that has come here, that the orders involving only the penalty amount now also requires a 10% of the penalty amount to be deposited as pre-deposit in addition to the deposit made under section 107 subsection 6. This is the recent change that has been done by the Finance Act 2025 enforced via notification with effect from 1st October 2025. This I've already told the fees that is going to be there for the GST. Another miscellaneous points, although taxpayer don't have any limit to approach to the GST, but yes, department has. If the matter is less than 20 lakh rupees, department is not expected to approach to the GST. This has already been circulated by the circular dated 26 June 2024. As you can see on the screen, there is a filing process for the GST. The electronical submission will take place within 3 months of the receiving the order. We have the time limit. Needs to be furnished in Form APL 05, followed by payment of appeal fees and the pre-deposit. After that, the hearing are expected to happen and the final resolution from the department side. Here I've also compiled a detailed list of the related forms that are going to be there and for filing this and the related rules. The major rule that are covered here is GST Procedural Rules 2025, GST Appointment and Conditions of Service and President of Members Rules 2023, amended in 2024, followed by the GST Procedure Rules 2025. As you can see on the screen, CGST rules related to GST has already been compiled for your ready reference. Rule 109A talks about appointment of appellate authority and tribunal members. Rule 110 talks about appeals to appellate tribunal. It gives us the detailed procedure related to filing of appeals and its acknowledgement. Rule 111 talks about procedure and appeals before tribunal. Rule 112 takes up production of additional evidence before the GStat. Rule 113 of the CGST rules takes up orders of appellate tribunal, followed by Rule 114 for rectification of orders for any error apparent on the face of record within 6 months. Orders of appellate tribunal, section 113. The GStat has the power to remand back any of the order passed by the appellate authority or the revisional authority under section 108. It can grant adjournments maximum 3 per party if the sufficient cause is known. And the tribunal may amend or any order passed under subsection 1 so as to rectify errors apparent on records on its own within 3 months, but only if correction does not increase tax liability or the refund oblique input credit unless the other party is heard. This has already communicated the tribunal is required to try and decide appeals if within 1 year of filing, and the copy of this order must be sent to the appellate authority, revisional authority, the appellate, and the concerned GST commissioner. Section 115 talks about interest on refund of amount paid for admission of appeals. This interest rate is similar to as provided in section 56 of the CGST Act. The rate of interest there would be same. Coming to section 116, authorized representative. So the question comes, who can be your authorized representative for this part? Your relative or your regular employee, your advocate, chartered accountant or a cost accountant or company secretary in practice holding a valid COP is also there. Retired commercial tax department officer, group B gazetted, or the GSTP, that is the goods and services tax practitioner, are all allowed to be the authorized representative under law. Another point to note over here is that a person who has been removed from government service or has been convicted of any offense related to GST or any similar law or found guilty of misconduct or declared insolvent until the insolvency is resolved cannot be your authorized representative under the law. Now, coming to the consequences for non-formation of the GStat, as I already told that earlier, any appeal, if the taxpayer is lost at the appellate authority stage, they were forced to go to the High Court. Even the matter doesn't involve any substantial question of law that results in the High Courts being overburdened with this. And CBIC has already communicated that more than 4.8 lakh orders are there that the GStat is going to handle in the coming time. The timelines for this are already described there. Yes, this I was talking about, that more than 4.8 lakh appeals are going to be there that the GStat needs to be handled. And although the tribunal is operational, but the work begins now. Major challenges ahead that include human resource availability, training of the members, digital readiness, consistency across the benches, and the protection of independence. So this is the way forward that we are expecting for this. I'll close with this thought. GStat is not another appellate body. It is the missing pillar of the GST ecosystem. Its success will determine the stability of GST litigation for the next decade. Thank you.
Thank you very much, Prachi Aroraji. Now over to you. I would like to invite Ms. Parul Agrawal for giving his valuable insight with our participants. Over to you, Parulji.
Yeah, thank you. Thank you so much, Akshat. And thank you, Prachi. It was, in fact, very well deliberated. आपने काफी अच्छे से समझाया, and this is also one of the topic which everybody including me was looking forward to. So when you said that obviously हमें पता है कि GStat has actually started, so obviously नहीं है, हमको नहीं पता था. So it was definitely very educating at your part. And on
Done,
this
ma'am.
note, I'll today be covering on very minor aspects of GST, but much awaited and talked about. And I think GST 2.0 ka jo main features hain, that I'll be talking about. The process simplification which has come, the new changes in GST registration, and किस तरह से inverted duty structure के बारे में, ITC के बारे में I'll be talking about, and certain compliances and refunds as well. So this would be the mix of topics that I'll be taking today. And let's straight away start with the November 2025, because November 2025 is very, very important month, I would say, when we say कि GST के जो major overhaul हुआ है in the past months, जिसमें major हमें notifications आई थी in the month of September, that are getting, most of them are getting effective from 22nd of so most of them are also getting effective from November 1st, which relates to registration. So registration से related जो है वो I'll be starting with that. So earlier, as we all know, that there was this regular scheme of registration under GST, which is not the case right now. अब हमारे पास दो और categories, one can say, are there. One is the low risk business profile owner, and second is the e-commerce online sellers. Now when we say e-commerce online sellers, then they are the parties who are registered on the e-commerce website. So this is not to be confused with e-commerce operator, because e-commerce operator are still the Amazons and the Mintras and the Etsy's of the world. So हम बात करें यहाँ पे ऑनलाइन सेलर्स की, जो कि रजिस्टर करते हैं एग्रीगेटिंग वेबसाइट्स के ऊपर, उनकी बात हो रही है. सो अभी यहाँ पे क्या है कि तीन कैटेगरीज क्रिएट हो गई हैं. The first category is a regular scheme of registration itself, which is there, which was always there, it is still there, जिसमें कि हमें 7 days के अंदर वेरिफिकेशन प्रोसेस कंप्लीट करना होता है. अगर फिजिकल वेरिफिकेशन तक बात जाती है, then it takes up to 30 days and sometimes even more if there is no objection. And then जो प्रॉपर ऑफिसर है उनका अप्रूवल भी इसमें लगता है रेगुलर स्कीम के अंदर. सो दैट्स व्हाई इट बिकम्स समटाइम्स कम्बरसम फॉर सर्टेन इंडस्ट्रीज एंड फॉर सर्टेन टैक्स पेयर्स. तो उनको जीएसटी रजिस्ट्रेशन ऑब्टेन करने में ही काफी इशू होता है. फॉर एग्जाम्पल आई टेक द केस ऑफ Amazon FBA. Amazon FBA के केस में, as we all know, और as most of us know, जो कि e-commerce sellers हैं, उनको मालूम है कि अगर उनको किसी एक स्टेट में सेल करना है and they want to keep their inventory with Amazon in their warehouses, then they have to mandatorily take the GST registration. For those who don't know, an e-commerce operator has to वैसे भी necessarily mandatorily take a GST registration. So you cannot make a single sale on Amazon or any other e-commerce website till the time you obtain the GST registration. But अगर आपको दूसरे स्टेट में Amazon के warehouse में FBA मॉडल पे अपना सामान रखवाना है, then also you have to take the GST registration of that particular state, which under the regular scheme was very difficult, because obviously physical verification का जब matter आता था, तो then the stock would be lying at the Amazon warehouse, which even the seller didn't have access to. They cannot get the physical verification done so easily, and it became very, very cumbersome for them. So ऐसे और भी practical challenges थे, जिसकी वजह से ये दो categories जो है create की गई हैं. Now before we move any further, let's understand कि क्या सिर्फ इन issues की वजह से ही government wanted to create special categories, या पहले जो regular scheme of registration है, why was it so stringent that physical verification भी है, proper authorized official का approval भी है, उसके बिना registration भी grant नहीं होगी. मतलब you cannot be a GST registered business person. Why was that so? That was because of multiple factors, including the menace of illegal ITC. So पहले क्या था, गवर्नमेंट के सिस्टम्स इतने रोबस्ट नहीं थे, एंड जीएसटी वाज इंट्रोड्यूस्ड, एंड देयरफॉर अब जबकि सिस्टम्स काफी सिंक्रोनाइज्ड हैं आपस में, एंड आधार ओटीपी, जिसके हम अभी आगे बात करेंगे, आधार ओटीपी वेरिफिकेशन इज आल्सो बीन इंट्रोड्यूस्ड. So after this, the government is trying to follow a funnel approach. Now this funnel approach is जहां पर जीएसटी का प्रोसेस जो है वो सिंप्लीफाई कर दिया गया है, एंड जस्ट द वे अ फनल इज लाइक दिस. So the opening is very broad and then it becomes narrower at the end. So similarly, like a funnel, जीएसटी रजिस्ट्रेशन का प्रोसेस अब इंट्रोड्यूस किया गया है, दैट एंट्री वुड बी इजियर बिकॉज विल टॉक अबाउट द लो रिस्क प्रोफाइल registration and the e-commerce seller registration. So entry easy है but exit मुश्किल है. Once you obtain the registration and you want to opt out, then that has become difficult because वहाँ पे सारे checks and balances जो हमारे regular registration के थे, they will come into the play. So without further ado, let me add to this. So regular scheme mein, as I told you, that 7 days to 30 days would take for the verification of documents, and then if physical verification is required, then even that happens. And accordingly, aapko GST registration, after the approval of the proper officer, you will obtain the GST registration. However, there is a new category which is being introduced, which is the low risk business profile. It is a defined category. There is a new rule 14A which is being introduced और इसकी नोटिफिकेशन भी है, नोटिफिकेशन नंबर 18/2025 डेटेड October 31st 2025. इस न्यू कैटेगरी में द प्राइम फैक्टर इज दैट अगर आपकी B2B सप्लाईज monthly B2B supplies do not exceed 2.5 lakhs, then you become eligible as a low risk business profile vendor. And then in that case, you can opt for this low risk profile and आपको 3 days में GST registration यहाँ पर मिल जाता है. Well, this is a voluntary scheme. It's a opt-in, opt-out scheme. आप इसमें opt-in कर सकते हैं and whenever your turnover exceeds B2B turnover exceeds 2.5 lakhs monthly, then आप इससे withdraw भी कर सकते हैं. So it's a fairly voluntary scheme. So there is a choice given to the person who wants to obtain the GST registration and accordingly they can go for it. इसके essential features हैं that Aadhaar authentication से you can obtain it. So Aadhaar verification is there. Then you can, if you opt for the low risk business profile business, then you have to take you're allowed single registration in a state. एक state में आप एक ही registration ले सकते हैं, आप एक state में multiple registration नहीं ले सकते on a single PAN. So that is also one of the intrinsic features. So we need to really discuss with our clients or prospects that अगर उनको एक से ज़्यादा warehouses करने हैं या एक से ज़्यादा place of supply करना है on a single PAN in a single state, then probably this low business risk profile is not for them. So this is something that needs to be discussed with your clients while deciphering कि हमें इस वाली स्कीम में जाना है कि नहीं. And of course जो आपका option है that is there that you can withdraw, but not, as I said, not without consequences because exit पे यहाँ पे checks and balances हैं. वेल जो आपका REG1 फॉर्म है उसके अंदर भी एक नया ऑप्शन 4.1 क्रिएट किया गया है फॉर दिस लो रिस्क बिजनेस प्रोफाइल. सो यू कैन ऑप्ट फॉर इट एंड अकॉर्डिंगली यू कैन ऑब्टेन इट. बस आपको 2-3 चीजों का ध्यान रखना है. फर्स्टली आपका B2B सप्लाईज शुड नॉट एक्सीड 2.5 lakhs पर मंथ, which also means that अगर कोई सिर्फ B2C seller है, if somebody is doing a business directly to the customers, then they can very well go for this low risk business profile GST registration. और there is a person जिनको बहुत ही फटाफट से GST registration चाहिए within 3 working days after the Aadhaar authentication, Aadhaar OTP authentication, you can generate the GST. So in that case आप इसको obtain कर सकते हो, but then again with the caveat that उनका जो B2B मंथली सेल्स है दैट शुड नॉट एक्सीड 2.5 lakhs. सो इस तरह के कुछ वेंडर्स या कुछ बिजनेसेस के केस में आप उनका रिकमेंड कर सकते हैं और आप ऑब्टेन भी कर सकते हैं लो रिस्क बिजनेस प्रोफाइल GST रजिस्ट्रेशन. वेल व्हाट हैपेंस व्हेन वी वांट टू ऑप्ट आउट ऑफ द स्कीम. सो जब इस तरह की स्कीम में हमें ऑप्ट आउट करना है तो देयर इज अ सर्टेन कंप्लायंसेस व्हिच अप्लाई एट द टाइम ऑफ एग्जिट. और एग्जिट कि क्या repercussions हैं, what are the results of it, that also we'll discuss because very commonly asked question is that once we opt out of the scheme, does our GST number get cancelled? So that is also very commonly people ask. So the answer is the GST number doesn't get cancelled. Your GST number remains the same, but you're opting out from one scheme to the regular scheme, which is the regular GST registration. सो फर्स्टली आपके सारे पेंडिंग रिटर्न्स जब भी आपने ये लो बिजनेस प्रोफाइल किया था लो बिजनेस प्रोफाइल जीएसटी रजिस्ट्रेशन लिया था, उसके बाद के आपके सारे ही जीएसटी के रिटर्न दे शुड बी फाइल्ड। कोई पेंडिंग अमेंडमेंट्स आपकी नहीं होनी चाहिए। फॉर एग्जांपल हम एक्सपोर्टर्स के केस में देखते हैं कि मोस्टली हम शिपिंग बिल्स, हमारे पास पूरा शिपिंग डेटा नहीं होता है एट द टाइम ऑफ फाइलिंग ऑफ R1, सो हम बाद में उसको अपडेट करते हैं, अमेंड करते हैं इन द फाइलिंग ऑफ द नेक्स्ट साइकिल ऑफ द नेक्स्ट मंथ, जिसमें 3B से पहले वी हैव टू डू इट एंड अकॉर्डिंगली वी कैन डू द रिविजन्स। सो कोई पेंडिंग अमेंडमेंट एप्लीकेशंस आपकी ना हो, दिस इज समथिंग दैट वी नीड टू टेक केयर। देन वी नीड टू सी दैट कोई सेक्शन 29 की आपकी प्रोसीडिंग्स ना हो, फॉर एग्जाम्पल कोई कैंसिलेशन की या सस्पेंशन की ऑफ द जीएसटी नंबर। सो यू शुड हैव अ क्लीन स्लेट, your GST registration, your pending GST returns should be filed. Your all amendment applications should be sorted out. There should not be pendency there, and also your section 29 proceedings should not be there for any cancellation or suspension of the GST number. Then let moving on, verification जो है that applies in case of when you're opting out of the low risk business profile, then the verification shall apply. The verification applies under Rule 9. So potential physical verification also comes into play, not necessarily in all the cases, but yes, in certain cases it will come into play. And then there is a documentation verification which is there, because whatever procedures are there in the regular scheme of registration of GST, all of that will come into play. And then again, many people have this query that whether our GST number will get cancelled if we opt out of the scheme, or we'll maintain the same number. So as I earlier clarified, yes, your GST number would be in place. It will not get cancelled, and you'll be issued you'll be opting out of this Rule 14A scheme, and you'll be obtaining a regular GST registration that we just talked about. So what are the cases in which we need to apply for this low risk GST number? I would suggest that there are certain scenarios in which we can. First is where timing is the essence, that your client needs the GST registration, very, very fast, and the time is less. Then you can do that, but you have to take care that the condition of maintaining the B2B supplies, monthly B2B supplies below 2.5 lakhs is mandatory. Because if that is not the case, then you cannot take a low risk business profile GST registration. Now, the second kind of category of businesses where you can take a GST registration for a low risk business profile is where the client is doing a B2C sale. So where there are just the customer base is there, it is the customers do not have their own GST number. In those situations, we can go for low risk business profile. But we need to ensure this, you need to confirm this with your client that all the sales are B2C. None of the sales are made to any parties which already have a GST number, and accordingly we need to ensure this for obtaining this low risk business profile GST registration. Now another thing which we must keep in mind is that the Aadhaar OTP verification. So this is an Aadhaar based system. So one must have a Aadhaar. Firstly, the PAN number should be there, and then you cannot do multiple registration in the same state. So it has to be one registration per state, which needs to be maintained in this case. So this is also something which one must price off to their clients, because it should not come as a deterrent later, because maybe the client has a plan of like, let's take an example of a cloud kitchen. In case of a cloud kitchen, clients do want to have more kitchens having different GST numbers in the same state, so to say. So in such situations, if the client has expansion plans or having more place of businesses in the same state, then probably we should not recommend, just to save time and just to get a faster GST number, we should not recommend a low risk business profile GST number to them, even if all their sales are expected to be B2C. So we cannot like blankly, plainly just say that, okay, if it's B2C, then let's go for this. It saves time, everything. But you have to also be very wary of the fact that if the client has expansion plans, if they are planning to have more than one place of business in a single state, if they have any expansion plans and they want to do it, then probably we should do the fact check before recommending any such proposal to them for obtaining the low risk business profile. Now let's move on to the third category, which is the category of an online seller. So at the onset, just as I mentioned, that online sellers are the sellers who are registered on a e-commerce website. So this e-commerce website, which is an aggregator website like a Amazon or a Etsy, they are actually the e-commerce operator. So let's not confuse the e-commerce seller with the e-commerce operator. So they are completely different concepts, completely different businesses, different business models, and very different way of obtaining the GST registration, doing the taxes, deposit of the taxes. The entire procedure changes for both of these parties. So let's not get confused between the two. So right now we're talking about online sellers, because as long as we remember, I have many online sellers as my clients. So as long as I remember, most of the e-commerce companies face this challenge, especially in case of an Amazon FBA proposal. Let me first explain what a Amazon FBA is. So these aggregator companies like Amazon, sometimes they have huge warehouses in certain parts of certain states of a country. It could be in India, it could be overseas. So this concept is FBA, that you bring whatever sales you want to make, you just shift all your inventory to that place or to the warehouse of Amazon, and from there the sales would be affected by Amazon, and you just need to clock the order, you need to make a confirmation, and accordingly their staff will dispatch the goods from their warehouse, and you do not need to do, or the online seller doesn't need to get into the packaging aspect of it or the delivery aspect of it. Everything would be taken care by Amazon under the FBA scheme. So more often than not, what issue that the online sellers face is that they need to mandatorily obtain a GST registration before making a sale in that particular state where the warehouse is being maintained. Now, this is a challenge. Anyways, any e-commerce operator, whenever they want to make a sales online, they obtaining a GST registration is mandatory, irrespective of their turnover value. So it is mandatory, but especially in a case where you're transferring your stock to another state in a warehouse maintained by the e-commerce operator, all the more important that you have to take the GST registration. And since you have a single pan under which you're doing it, then it becomes very difficult, because a physical verification process is followed in case of goods, in case of online sale of goods, and therefore it becomes very difficult, very difficult to have to obtain the GST registration in that particular state, because every state has their own procedure for issuing the GST number. You have to satisfy the officer, you have to also ensure the physical verification of the warehouse, which an e-commerce seller cannot do, because this warehouse is firstly not maintained by them, but it is maintained by Amazon. So therefore it cannot be done in many cases. So that's why another category is being introduced to simplify the registration for e-commerce suppliers, wherein a single pan based registration system is being brought about. There were talks that there will be a notification which would come into effect in the middle of November or later November sometime, but it hasn't come through yet. But yeah, yes, there is a single pan based registration which is being introduced for e-commerce suppliers, and you need not have to, very important development here is that an e-commerce seller now henceforth, effective from November 1st 2025, need not have state-wise place of business. So this condition of having a state-wise place of business has been done away with in case of a e-commerce seller. Then what do? They have said that one can use e-commerce operator, which is the eco, which is the Amazon. One can have a e-commerce operator address, which is the warehouse address that can be used as a proxy for the registration of a e-commerce seller. So this is a big sigh of relief. However, it needs to be seen how this will pan out in the practical sense. Also, since e-commerce sellers are also selling to are doing B2C sales, then if they meet the conditions, then they are also open to be categorized as a low risk business profile, business operators, and they can get the registration under the low risk category as well. But they need to see the pros and cons, and accordingly, for newbies and new starters, as chartered accountants, we can recommend them that they can obtain those kind of so they can make a choice between the three types of categories which are now into play, and accordingly one can suggest and obtain the GST registration. Now, moving on further, I think the much talked about 56th Council meeting of GST, much has been analyzed, much has been done on this, because the effective date was September 22nd, on which the new rates had to come into play. But still, doing any kind of a GST overhaul discussion without touching upon this point on 56th Council meeting, I think is not doing justice to the topic of GST itself, because much overhaul has happened. And I would say a lot of restructuring has also happened. Not necessarily only two kind of rates exist now, which is 5% and 12%. There are the categories have just restructured themselves. The cess is also being maintained in certain categories, but yeah, a major overhaul has happened. So it's very, very crucial that we talk about that before we conclude on the GST 2.0 masterclass, so to say. So let's talk about notifications, because many a times I receive so many queries. The clients are still confused, or they fail to find the HSNs, and they ask me particularly about the notifications. So this entire jargon of notification needs to get resolved, so that whenever somebody asks you, okay, where is it in writing, then you can really produce that, and for which as professionals we should have an understanding of all these notifications. So let's start discussing them. So there's a slew of notifications that came on the 17th of September, and which we'll be discussing today. And accordingly, we'll gain also some knowledge about these notifications, how they work, so that we can suggest to the client they can also do, they can also put some DIY and confirm the rates at least, and they can understand the effective date also from the base source document itself. So let's start. So as I said, there is a slew of notifications which were issued on the 17th of September, with effective new rates coming into picture from the 22nd of September 2025. So let's talk about the first notification, which is dated 9th September 2025, which is a central tax rates notification, and it talks about the goods. It talks about the taxable goods which are there, on which the GST rates, the revised GST rates will apply. So whichever earlier notification was there, it got it got overwritten by this notification number 9 2025. Then we have a notification number 10 2025, also dated on 17 November 2025, which also relates to the central tax rates, but this talks about the exempted goods. So there is a very important thin line between the two, because somebody may ask you relating to a good, relating to their product, which could be an for coming from an exempt category. So if you start looking for that in this notification number 9 of 2025, you will not get anything, because that notification relates to the taxable category of goods and not the exempt category of goods. So if you need to really find out your product from the exempt category of goods, then we need to see the right notification, which is the notification 10 of 2025. uh, then there is a notification 11 of 2025, which talks about the services. Now, these services which are being provided to the petroleum companies. So, all of us know that petroleum products are outside the purview of GST. But what about the services? there are n number of services which are being provided to the petroleum companies, to the companies who are into the production, extraction of the petroleum products. So for these services, there's a dedicated notification, which is notification 11 of 2025. Moving forward, there's a notification 12 of 2025, again dated 17th September 25, which relates to rates of GST on old used motor vehicles. So this is also very important. One should refer to. So as we can see that there are certain categories which are being created, and accordingly these notifications are being issued. Certain notifications completely override the previous ones, and certain notifications have only amended the pre-existing rate notifications. For example, in case of services, as we come along, we'll see to that. Then there's another notification 13 of 2025. If you want to make notes, you can do it now, because these are like this is quite a numerical. So I'm just mentioning the number, and these are actually in a chronological order. So you can see 9, 10, 11, 12, 13. So accordingly, we're right now talking about the 13 oblique 2025 notification dated 17 September 2025. Now this talks about the handcrafted items. So if somebody is doing any domestic sale of handcrafted items, be it an e-commerce seller, be it an exporter, all of that, all those categories of handicraft items is covered into this notification 13 itself. So if you start looking for it into some other notifications, you will not get it. So that's something we must keep in mind while searching for the source document for the rate change. Moving on, there is a notification 14 of 2025, which contains the central tax rates for the building material, which is there. Then there is a notification 15 of 2025, which talks about the amendment in the taxable services. So in case of services, the earlier notification, it is still maintained. It doesn't get override. Now the new rates will only supersede, or there will be amendment to the existing notification, and accordingly we need to refer for those amendments to notification 15 of 2025. Then there is a notification 16 of 2025, which talks about the insurance, health insurance category, which is now become exempt from the GST. So this exempt category, there's a dedicated notification to it, which is the notification 16 of 2025. Uh, Moving forward, there is a notification 17 of 2025, which is again dated 17th September 25, which talks about the local delivery service. On that, the GST rates, it talks about that. And then there is a notification 13 of 2005, 2025, which talks about the amendment to the CGST rules, and this relates to the procedure of appeals before GSTAT. So just the session before today's session, it culminates from this notification, which talks about the GSTAT, the formation of GSTAT, the forms are being notified, the changes in Form 9 and 9C, the separate reporting which is there for e-commerce operator in Form 9C, all of that is covered in this notification. And then there is a notification number 14 of 2025, which talks about the provisional refund. Now, provisional refund is not allowed in certain specific items like when you have nuts, pan masala, tobacco, etc. So they're essential oils. So this notification talks about the procedural refund, excluding these items. Then there is another. So we know that mostly when the Finance Act gets introduced, then the GST changes do not automatically come into the come into play. They are not effective from 1st April of the next of the next financial year. So generally, what happens is that enabling provisions have to be introduced to a notification under GST, and it actually notifies the effective date from which the changes or the proposals will come into effect. So then there is a notification 16 of 2025, which contains the enabling provisions of Finance Act 2025, which shall be effective from October 1st, 2025. So all these sections, there are a slew of sections which are being introduced, which will come into effect from October 1st, 2025, which are culminating from the Finance Act 2025. So this sums up the sum and substance of the notification. At the very onset, I discussed about the importance of these notifications because it's very, very important in understanding the concept of GST altogether and to decipher the law. So, moving forward, let's talk about the GT. Let's talk about certain changes under GST 2.0 and the impact. And it goes without saying, needless to say, that we should also understand the repercussion when it comes to ITC and the refund, all of that. We'll be discussing that. So let's first talk about GTA because there are many logistic companies also that I represent, and this was a commonly asked questions from them that what has happened to the forward charging GTA services. So very, very important also because those that were without ITC, without claiming of ITC, are maintained at 5%, but those where you take the benefit of ITC, earlier the forward charge companies were charging 12%, but now if you take the advantage of the ITC, then you need to charge 18% GST in case of GTA with forward charge companies. Then there is also, we have seen that with the advent of e-commerce and other forms of businesses, and even otherwise, there is a multi-modal transport of goods which happens within India. So this multi-mode means you can go use the bus, you can use the train, you can use the trucks. So many modes of operation, but excluding air. So right now we're talking about many modes of transporting the goods from one place to another within India, but excluding air. So in this case, there is a GST. Earlier it was 5% with ITC. Now it is 18% with ITC, and so this sums up on certain aspects relating to the logistic companies, which I wanted to touch upon. Now let's understand certain issues relating to GST 2.0 on which the clarifications have not come, but we have to devise because we anyway have to comply, we anyway have to move forward with the businesses. So therefore, even though the clarification hasn't come, but we'll nevertheless go ahead and be very, very conservative in our approach, and following very conservative approach, we try to be over compliant rather than being under compliant, because being over compliant and reasonably cautious doesn't cost you any penalties or interest, but being under compliant and being very aggressive in tax matters does have a penal cost to it. So therefore, let's understand certain repercussions of this overhaul of GST rates, and which stand unclarified from government side, and what we are as professionals are doing about it. So firstly, let's take the example of clothing and footwear industry. So clothing and footwear industry is an industry where there has been a change, that the nomenclature which was earlier being used was taxable service. So GST would apply on a taxable service as we do in all the other cases. So taxable value is the, when we do the R1, then we see that we have to first write down the taxable value, compute your GST on the taxable value itself. But right now, the change that has happened is that they have replaced this taxable value with the sales value. So, and which is not being defined. Sales value could be anything. We offer so many trade discount, we offer discount, the MRP. There are certain prices which are included in MRP. So MRP is a very complex structure, and there are multiple components to it. So when you replace a taxable value with a sales value, then it does create some confusion. And therefore, let's first understand what the changes are. So in case of apparel and clothing and footwear industry, the government has introduced that sale up to 2,500, there'll be a GST rate of 5%. And on a sale value exceeding 2,500, there'll be a GST of 18%. Now, this is quite clear that if your sale is exceeding 2,500, then you will be applying 18% GST. But what remains to be seen is how do we decipher the sale value, whether it includes GST or whether it excludes GST. So I think following a very, very conservative approach, I think our MRP should include GST and we should do a backward calculation, is what I feel is the right approach. That if you are having, for example, 2,499 as your MRP, then your GST should be included in it and it should be at the rate of 5%. But if your MRP is even 2,600 rupees, then also you should do the reverse calculation. But here the GST should be computed at 18%. I think that is the right way because they are going to be looking at the sales value or the MRP and not the taxable value. So this is one of the issues which pertains to the clothing and footwear industry. Now moving on the ITC reversal. What are the cases of ITC reversal on a rate reduction? Because we have seen that more often than not in most industries there is a rate reduction, major rate reduction which has happened, and accordingly we should be very clear as to how to deal with it. Now let's take an example of health and life insurance only. As I earlier mentioned, they are now part of the exempt category. So they are part of the exempt category. So in this situation, when health and life insurance premium or the services are in the exempt category, how do we go about it? Can we claim a GST refund in this situation? Can we totally go for an ITC reversal? Whatever accumulated ITC is there, we can go and ask for the GST refund in this case. Now, Rule 42 and 43 of GST Act says, no, we cannot do this because the reversal has to be on account of the lower tax rate, but you cannot take a reversal for your past ITC due to the present changes in law. So, for example, from 22nd September, your output GST would be reduced, but whatever ITC you want to claim in a reversal, that pertains to the previous years. So you cannot really do this, even though this is an inverted duty structure, but you just cannot do it because same goods and services are simply moving from a higher rate to a lower tax rate, and this does not qualify for a inverted duty structure. And there is a proper circular of 2020. I think it's circular 135/05 of 2020, which categorically makes this clear that in such kind of a scenarios you cannot go for it. The previous ITC cannot, or at a higher rate, cannot be adjusted against a lower output supply if that lower GST output supply is due to a rate change or a rate reduction. So this is one of the aspect I wanted to discuss. But let's take an example of a manufacturing enterprise. In case of manufacturers, what happens is that whatever raw material you purchase, you put it through a process, to the manufacturing process, and due to the manufacturing process, whatever end result came, the good or the product that gets manufactured, it is not the same as the input. So therefore what happens is that there is a change which happens of the raw material. They become they totally lose their shape and size and value, and they become into another product itself. So in such a scenario, this circular 135/05 would ideally should not apply. I think it applies more in case of traders, but in case of manufacturers, since the product itself undergoes total change, therefore a rate reduction scenario should also apply for culminating into a refund scenario using the inverted duty structure, because even the ITC on the manufactured product, not the raw material, but on the manufactured product, the ITC you can claim it against the reduced sales of the reduced output GST, the GST deposit. With this, I would sum up today's discussion. And if there is a need for extended discussion on this, you can reach out to me through ISFA, or you can write down your queries on the chat box, and we can take it during the end of the session. Yeah, thank you so much.
Thank you, Parvati, for your detailed means expertise which you are sharing with our participant. And participant, we will share all the speaker contact detail with you post webinar through email so that you can directly reach out to them and consult and take their services. Now, I would like to invite our next speaker, Miss Anjalika Chopra. And Miss Anjalika ji, over to you. Please, you can give your share your topic.
Thank you, Akshat. I'll now be covering, some of the recent judgments, litigation matters, basically. You all had a fantastic masterclass on, the recent developments, and Prachi enlightened us all about, the GSTAT formation. So the fact remains that the benches are being constituted, and till the time the benches are in the process of getting constituted, writ petitions in the High Court and specially petitions in the Supreme Court will continue for a while. With this perspective, I'll just cover a few, very few Supreme Court and High Court judgments, which went to these courts by way of writ filed by taxpayers and assessees, mostly on account of the fact that the tribunal was not constituted by then. However, some of these decisions will have, far-reaching ramifications, in the sense that these may not necessarily be to do with the fact that an appeal, was due and could not be filed. But so moving on to that, there's one aspect which I want to touch upon, which is about, there's a concept in GST Act whereby an assessee can file an application for rectification of an order. One of the cases I'm going to discuss here is a judgment of the Madras High Court in the case of Aries Interior. This was a case which was against the state GST authorities. The petitioner in this case had filed an application for rectification of an order. The rectification application was delayed substantially, and on account of that, the department had taken a view that the assessee's appeal is time barred. In this perspective, the third proviso to Section 161 of the GST Act, which covers rectification applications, was brought into play. And this covers a scenario where the department does not have the right to suo motu, deny or decline an assessee's or a petitioner's application. The High Court in this case was lenient to allow the application to be set aside and the regular appeal of the petitioner to be considered. But this was not a relief which came in an easy way to the petitioner, because in this case, the petitioner's bank account had already been attached, and the petitioner was given very strict timelines within which there was some compliance to be undertaken. For example, the petitioner had to deposit 25% of the disputed tax amount, and that too from the electronic cash register. So typically, when a pre-deposit is allowed to be made in appeals, it can be made by using the credit ledger. But in this case, the High Court specifically directed that the pre-deposit has to be made by way of using cash, the petitioner. And similarly, the petitioner was given one more chance to file an appeal within a stipulated period of 30 days, and after which the department was asked to dispose of the appeal within a period of 2 months. So what's important here is that rectification application is clearly a mechanism which is available to taxpayers. It's not necessary always that an appeal has to be filed, but rectification application cannot be suo motu dismissed by the authorities, is also an important ratio of this case. Having said that, these reliefs don't come easy. The High Courts do impose a lot of stringent conditions both on the petitioners as well as on the department. There is another judgment again on the issue of rectification application, which I will talk about a bit in the context of, again, the taxpayers' rectification application being considered, but belatedly, and because of that, the petitioner had lost the opportunity to file an appeal within the time period, and so the appeal that was filed was delayed. This writ petition came up before the Chandigarh bench of the Punjab and Haryana High Court. Now, there was a substantial delay of more than almost 100 to 150 days in filing the appeal, but that was on account of the fact that the rectification application had been delayed. The outcome was delayed. So again, in this case, the court held that, and I'll read out the relevant extract, where the petitioner has admittedly awaiting decision upon rectification application, it cannot be held that there was delay in filing of the appeal. We do not find any merit in the argument raised that it was open to petitioner to have filed an appeal alongside the rectification applications. Basically, the department had alleged that agreed that the rectification application was pending, but the petitioner could have gone ahead and filed the appeal within the time frame, the stipulated time frame. But the court went to the extent of saying that what if the application, the rectification application had actually corrected the error of the order, then there was no occasion for an appeal to be filed. So again, on the ground of natural justice, etc., the High Court upheld the petition and stated that the appeal should not be considered to be time barred. This was another typical instance of the rectification application mechanism, which is quite handy for assessees, and that saves a lot of burden on litigation. And assessees can go for rectification of an order in case there is any error which appears on the face of the order. Another case of delay, but this was in a slightly different context. This was in the context of refund. The GST refunds which are claimed by assessees. GST refunds could be of various kinds, could be on export of services, export of goods. There are also refunds which are available in case of deemed exports being a scenario where you have a license under the foreign trade policy. But instead of importing the goods under that license, you can also procure from the domestic market. And there, in that case, also IGST, which is paid on domestic procurement, can be claimed as refund. In this case, again, so the assessee had filed a refund application, which got delayed. There was a delay of almost 1,232 days in this particular case. And then the assessee asked for refund of or interest on the refund which was granted on a delayed basis. So some of the important dates which came in this case was that the petitioner's initial application for refund was rejected in 2020. Then the department said that we are not under any obligation to give interest on refund. Nevertheless, then the assessee had appeared before the appellate authority. The appellate authority had allowed the refund to be sanctioned. Again, another application was filed for refund after the order had been passed. Then on that basis, again, the department said that this is it's a belated refund application. Then the petitioner appeared before the High Court. This was the Bombay High Court. It was a writ petition in the Bombay High Court. And ultimately, it was held by the Bombay High Court that the interest on refund has to be granted from the date of the original refund application. This is quite a landmark judgment to cover these scenarios of refund being delayed by the authorities. And after they have delayed sanctioning or granting of the refund, they are also required to pay interest. So definitely a welcome judgment. Another case on refund that I'll touch upon, this is from the Gujarat High Court in the case of Varidhi court spin. This was a case which I talked about in case of deemed export benefits. So the refund application was filed by a petitioner who had procured certain capital goods under an EPCG license from within India and filed a refund application. The refund application was held to be erroneous. Then the petitioner had to rectify the refund claim. After that, again, there was a notice which was issued to the petitioner. Then a second rectified refund application was filed by the petitioner. Again, a show cause notice was issued and this application was sought to be denied. Then the petitioner filed a third rectified refund application. So this process went on for, you can very well imagine, a couple of years. Now, again here, what emerged was that the petitioner had legal remedy. Legal remedy is available to companies to approach the next appellate authority. Now, where the next appellate authority, so in this case, the case had gone up to the first appellate authority. No relief was available before the first appellate authority. So the petitioner again approached the Gujarat High Court in this case. Finally, when the Gujarat High Court passed the order in favor of the petitioner that refund is eligible, then again, the refund application that was considered was the original refund application, but the documentation that was taken into consideration was of the third rectified refund application. So again, a major relief for assessees, and clearly the message here is that there is a lot of recourse and there is a lot of relief in litigation. So one must not give up. On technical grounds, definitely the high courts and even the Supreme Court do grant reliefs on technical grounds. So this was more in terms of certain refund and rectification aspects. Another important area of practice under GST is on obtaining advanced rulings. Advanced rulings, as you all would be aware, pertain to areas where you propose to undertake an activity, or maybe you have already started undertaking an activity, but you can approach the GST authorities to obtain a ruling on a question of law primarily. Now, the advanced ruling provisions also specify the nature or the kind of issues for which an advanced ruling can be obtained. A typical scenario arose in case of a company which was looking at an advanced ruling question pertaining to whether or not GST is payable on reverse charge mechanism. Now, the Advanced Ruling Authority and the Appellate Advanced Ruling Authority also had denied the benefit, basically on the very premise that RCM, reverse charge mechanism facility, is not something that you can approach for to the Advanced Ruling Authority. So the petitioner in this case went directly to the Supreme Court. Now, this is a peculiar situation where, especially petition was filed in the Supreme Court. As you all again would be aware that the Supreme Court does not usually entertain such petitions, but because it was a very substantial question, because even payment of GST and the reverse charge is effectively a deemed output service for companies, and a lot of companies like yours are in the business of paying GST on reverse charge basis. So the Supreme Court in this case upheld the plea of the assessee that even the question of determination of tax under RCM is a question which deserves interference, or rather consideration by the Advanced Ruling Authority. So the petition of the petitioner was allowed. So broadly, the cases I've covered summarize the fact that courts have been granting relief to petitioners. There is definitely the law which supports all these positions that have been taken, and the lower appellate authorities, or even the lower authorities, even if they do not grant relief for these kind of matters, the doors of the courts can definitely be knocked, and reliefs are granted. But of course, again, one word of caution here is that these are judgments which I've covered, which are favorable for assessees. There could be judgments similarly of high courts, maybe of coordinate benches, or of maybe different single member, or other division benches, etc., which may be contrary. So it's important that you analyze and evaluate the pros and cons before you even approach the high court, because it does take time. All these cases that I've talked about have taken a number of years. So while it appears that I didn't get relief at a particular level, I went to the next level, I got relief, but all this process took a lot of time, number of years. So I'll pause here. My colleague Puneet would also be covering a few key cases on GST. And on a lighter note, it will be a change for all of you, because so far it's been very monotonous with you hearing all female voices. Now it's time to hear. Of course, Akshay has been coordinating in between, but then it's time for you to hear a different voice. So thank you once again, and of course we're open to question and answer at the end of the session. Thank you.
Thank you, Anjalica ji. Now I would like to invite Mr. Puneet Chopra from Chopra and Chopra company. Puneet ji. Yeah, hi. So over to you, sir. Please start your topic.
Good afternoon, everyone. Thanks to the earlier speakers, Prachi, Parul, and Anjalica, for sharing important recent developments in GST. So just carrying the topic further, I'll be sharing some basically two important recent judgments of the Supreme Court. So they're quite recent, and just last 2 months or something, we got these judgments, and they're also very important. So one of the issue that has really been a subject of dispute from the VAT times has been in cases that when the seller has issued some invoices to us, but that registration has been cancelled, or the seller has not deposited the GST. or the VAT at that time, should I be entitled to take the credit for that? Because I have paid the entire amount. So this has been a major dispute issue. And so we have one welcome judgment from the case of Shanti Kiran India Private Limited of the Supreme Court. So in this case, before we talk about the decision, I'd like to highlight that there are two possibilities, that either the seller may have deposited the tax collected from the purchasing dealer before the cancellation of registration, or the seller may have defaulted in depositing the tax despite having collected it from the purchaser. So in a scenario, that is the first scenario where the seller has actually deposited the tax and his registration has been cancelled, this issue was to a large extent covered by the various courts, and ITC was granted in most of the cases. But now this important decision over here is that even in a case when the seller has not deposited the tax, so what will happen in that case? So this question arose before the Delhi High Court, and the question exactly was whether the benefit of ITC, this is VAT case, Delhi VAT case. So the question was whether the benefit of ITC could be granted to registered purchasing dealers who had paid tax to registered selling dealers in accordance with valid tax invoices, even though those selling dealers had subsequently failed to deposit the tax so collected with the government. The core issue therefore was whether a bona fide purchaser should be denied ITC solely because the seller, despite being registered at the time of the transaction, defaulted in fulfilling its statutory obligation to remit the tax. In this matter, the Delhi High Court directed that the benefit of ITC be granted to the purchasing dealer, stating that bona fide purchasers could not be denied ITC merely because the selling dealers failed to deposit tax collected from them. This decision of the High Court was thereafter challenged before the Honorable Supreme Court. The Supreme Court, in its recent judgment dated October 2025, that is very recent, upheld the view of the High Court and dismissed the appeals, affirming that ITC cannot be denied to genuine purchasing dealers when the seller was registered at the time of the transaction and the invoices were found to be valid. So also, I would like to add here that also, Andika said, the compliance is also important, and the facts are also important. It's not that, so this is a favorable decision, but the dealer was registered at the time, the proper invoices were issued. So all these things, also the entire compliance should also be there. I'll say, so I'll just add what the Supreme Court further held. The Supreme Court observed that there was no dispute regarding the fact that on the date of the transaction in question, the selling dealers were duly registered with the department. However, subsequent to the transactions, the registration of those dealers was cancelled, and they had defaulted in depositing with the government the tax they had collected from the purchasing dealers. Thus, the court held that there was no dispute regarding the fact that the selling dealers were duly registered on the date of the transactions, and neither the genuineness of the transaction nor the validity of the invoices had been questioned on the basis of any inquiry. In these circumstances, the court found no justification to interfere with the decision of the High Court, which had directed that the benefit of ITC be granted to the purchasing dealer after due verification. So again, they have used the word due verification. So it's important that the invoices are proper, your returns are filed, and the dealer was also registered. So these and other compliances like your regular filing of returns, they all should be there. So then only you can take the benefit of these decisions. And the other thing is, now this is a VAT decision, but I think to a large extent one can use this in GST matters, because there is a lot of litigation in GST, whether there is your 2A versus 3B mismatch, or your 2B is there now, and you have to take monthly credit, or, all those issues are there. So this, and people do face a problem with the seller not filing the returns on time, or the credit being denied, and maximum litigation that we are getting is auto-generated notices of mismatch are due to these issues. Now I'll go to another important Supreme Court judgment. Another major issue that people are facing today is, so before the GST, I'll just like to highlight, we had VAT, service tax, excise. So there was a state department, there was a central department. Now in GST, both the departments are functioning. Some of the companies are registered with the state, some are registered with the central department, though it's the GST department. But there are also some intelligence agencies in GST or some other cells or the audits, which additionally are issuing notices, conducting inquiries. So many people are facing the problem that they're getting multiple notices from various authorities, and there's multiple litigation on the same subject matter. So again, a recent judgment of the Supreme Court is useful in this case. This is in the case of Armor Security India Limited. I'll just briefly discuss the facts and then we'll go to the decision. So the petitioner, that is the company Armor Security, was registered under Delhi GST, and they are engaged in providing security services. So in November 2024, the company received a show cause notice under Section 73 of the CGST Act from the jurisdictional department. It is a state GST authority for tax period 2021. The said show cause notice was served on the ground that net tax was under-declared due to non-reconciliation of turnovers in other returns and e-way bill information, and excess ITC had been claimed. So this notice was issued in November 24 from the state GST department. Just 2 months afterwards, in January 25, a search was conducted at the registered premises of the company under Section 67(2) of the CGST Act by officers of the Commissioner CGST Delhi East Commissionerate. A Panchnama was drawn seizing electronic gadgets and documents. Thereafter, summons under Section 70 of the CGST Act were issued to 4 directors of the petitioner company, requiring them to produce documents. So now this is a notice within 2 months from a different department. So what the company did was they sent a letter in January itself to the Commissioner CGST Delhi East Commissionerate, that is the second authority, the one which subsequently started these proceedings, stating that the petitioner is being investigated by the state GST on similar grounds. But since they did not get any relief, they filed a writ petition before the Delhi High Court on the ground that as the state GST has already made investigation in respect to the same issue, the Commissioner CGST Delhi East Commissioner does not have jurisdiction in view of Section 2B of the CGST Act. So I will read out the relevant extract of Sections 2B of CGST Act so we can understand what that section says and how this was challenged and how it can be challenged by others also. The Act states, where a proper officer under the State Good and Service Tax Act or the Union Territory Good and Service Tax Act has initiated any proceedings, the word here is proceedings, on a subject matter, no proceedings shall be initiated by the proper officer under this Act on the same subject matter. So here the key word is proceedings and subject matter. So we go to the High Court decision. The High Court held that the expression any proceedings in Section 6(2)(b) cannot be construed to include a search or investigation. So what the High Court basically said was that the first notice was issued in November 24 by state GST. So that was a show cause notice. But in January 25, what was done was it was not a proceeding, but it was basically a search and summons were issued. So there was no conflict as far as Section 6(2)(b) of the CGST Act was concerned. I'll just read it again what the section says. Where a proper officer under state GST has initiated any proceedings on a subject matter, no proceeding shall be initiated by the proper officer under this Act on the same subject matter. So what they're saying is it is not a proceeding, it's just summons and inquiry. So then now this matter was again they through the SLP, that is special leave petition. the company approached the Supreme Court. So we'll now talk about the conclusion of the Supreme Court. So I'm highlighting the main conclusion. The Supreme Court held that Clause B of that is Section 6(2)(b) states that there is a bar on initiation of any proceeding on the same subject matter. So they said, yes, this is correct. Parallel proceedings should not be initiated by other tax administration when one of the tax administration has already initiated intelligence-based enforcement action. Which further held all actions that are initiated as a measure for probing an inquiry or gathering of evidence or information do not constitute proceedings within meaning of Section 6(2)(b) of the Act. So again, the Supreme Court held that mere probe, mere inquiry or gathering of information does not constitute proceeding. It further held that initiation of any proceeding refers to formal commencement of adjudicatory proceedings by way of issue of show cause notice and does not encompass the issuance of summons or the conduct of any search or seizure, etc. It further held the expression subject matter refers to any tax liability, deficiency, or obligation arising from any particular contravention which the department seeks to assess or recovers. Where any two proceedings initiated by the department seek to assess or recover an identical or partial overlap in the tax liability, deficiency, or obligation arising from any particular contravention, the bar of Section 6(2)(b) would be immediately attracted. Further held that where the proceedings concern distinct matters, the same would not constitute a same subject matter even if the tax liability, deficiency, or obligation is same or similar. And the bar under Section 6(2)(b) would not be attracted. I think that is clearly understood. The matter, if it's different, then obviously it will not be considered the same. But what is the same subject matter? So on this also the court has held the twofold test. So there's a twofold test for determining whether the subject matter is same entails first. That is, the first test is determining if an authority has already proceeded on an identical liability of tax or alleged offense by the SSC on the same facts. And secondly, if the demand or relief sought is identical. So the issue has to also be the same and the demand or relief should also be the same. So this was the conclusion they gave. But at the same time, what the Supreme Court has done, it has done a very wonderful thing. They have laid down guidelines. Now, as we are aware that what the Supreme Court says is the law of the land. So these are very important guidelines which have to be followed by everyone. I'll just read out, and these are very helpful for future proceedings that anyone is facing or even the current ones. I'll read the guidelines were issued, which are as follows. Now, these are applicable to which cases? They are applicable to cases where, after the commencement of an inquiry or investigation by one authority, another inquiry or investigation on the same subject matter is initiated by a different authority. So these are the various guidelines which I'm going to read. First, where a summons or show cause notice is issued by either the central or state tax authority to an assessee, the assessee is in the first instance obliged to comply by appearing and furnishing the requisite response as the case may be. Mere issuance of summons does not enable either the issuing authority or the recipient to ascertain that the proceedings have been initiated. Obviously, they have highlighted, yes, mere summons is not a proceeding, but they have also made it clear that the assessee has to comply with the proceeding. They have to give all the information to them. It's not that you do not cooperate with them. So next guideline is where an assessee becomes aware that the matter being inquired into or investigated is already the subject of an inquiry or investigation by another authority, the assessee shall forthwith inform in writing. What is important is in writing the authority that has initiated the subsequent inquiry or investigation. So it's let us say in this present case only, in the November the first show cause notice came. So it was what the assessee did was the right thing. They had to inform in writing to the second authority. And these guidelines are for the department as well as the assessee. So it's like the companies have to also follow these guidelines. It's not that they are just only for the department. So the third guideline, Upon receipt of such information from the assessee, the respective tax authority shall communicate with each other to verify the veracity of the assessee's claim. So the Supreme Court has laid out very clearly, when you receive, department receives this letter, the second authority and the first authority conducting the investigation or matter, looking to the matter, whether show cause or not, they should communicate with each other. And thereafter, the Supreme Court has said, if the claim of the taxable person regarding the overlap of inquiries is found untenable and investigations of the two authorities pertain to different subject matters, an intimation to this effect, along with the reasons and specification of the distinct subject matters, shall be immediately conveyed in writing to the taxable person. So these authorities cannot keep quiet, or they cannot, we are not take any action. They have to communicate to the company that what action they are taking. If they believe it is the same subject matter or it's a different subject matter, they have to communicate that. The next guideline is a very important one. The taxing authority as well the taxing authorities are within their right to conduct an inquiry or investigation until it is ascertained that both authorities are examining the identical issue to be discharged, the same contravention alleged, or the issuance of show cause notice. Any show cause notice issued in respect of a liability already covered by an existing show cause notice shall be quashed. Now, this is very important. I'll repeat again. The Supreme Court has held that any show cause notice issued in respect of a liability already covered by an existing show cause notice shall be quashed. Further, they have also covered the scenario where sometimes both the authorities do not cooperate with each other. So this is what they have written. However, where the authorities are unable to reach a decision as to which of them shall continue with the inquiry or investigation, then in such circumstances, the authority that first initiated the inquiry or investigation shall be empowered to carry it to its logical conclusion. And the courts in such case would be competent to pass an order for transferring the inquiry or investigation to that authority. So in case both the authorities, quite possible, sometimes it's central authority, state authority, and they don't, both of them say that we want to continue with the proceedings or the investigation. In that case, in the not able to decide to whom to transfer the case, then the first authority which started will have the authority or the power to continue with it. And just one last point, I know that we are running out of time. Just last important point that the Supreme Court has stated in this, I'll just read out. If it is found that the authorities are not complying with these aforementioned guidelines, so what does the company do? The court has held, it shall be open to the taxable person to file a writ petition before the concerned High Court under Article 226 of the Constitution of India. So this is another thing which the Supreme Court has clearly mentioned, that yes, in case both the authorities do not comply, or any of those authorities with our guidelines, you can come to the High Court by way of a writ petition. So with these words, I will conclude. And yes, these are all case specific, fact specific. Yes, and the court has also made it important that you have to comply with all the compliance, all the returns, you have to cooperate with the authorities. But yes, you can come to the court whenever there is an issue. And yeah, thanks. Back to Akshayji.
Thank you, Punitji. Thank you very much to all the speakers. We have 5 questions left in our Q&A box, which are not answered. So I request to all the panelists, please switch on your video and answer the question. If you wish, I can also read out the question, or either you just read out the question and answer verbally. Miss Prachi, are you there? Miss Parul, Miss Prachi? Uh, um, Miss Angelica and Mr. Puneet, if you wish to answer any question which are remain unanswered in Q&A box, you can give the reply on the audio also. It's not mandatory to give the type answer.
Yeah, Akshayji, we answered a few. For confusion, if you can read out which is still the open question.
Sure. I'll read out the question. First question is that we have constructed commercial property and gave it on rent. Are we are filing GST on monthly basis? Please advise how we can claim ITC.
Okay, this is from Mr. Sukumaran Ajish. Sukumaranji, see, this is actually it's a debatable issue at the moment, whether or not, ITC will be eligible. Now if the rent is for commercial property, typically it should be available, but there are restrictions in the law. So I would suggest that this will have to be taken in detail offline, because there are restrictions which are specified for taking GST of credit of GST paid on construction for commercial property. So it's not possible to give a black or white answer at the moment like this. It will require some analysis. Can be taken offline, of course.
Okay, so next question is we have the same question he is asking again in bottom. No issue.
I see.
So next question is ये भी ऊपर भी same ही है इनका.
You're welcome, Sukumaranji.
Okay. If my company sells B2C and B2B with sales crossing 2.5 lakh in a month, and I want to use Amazon FBA in another state, is it advisable to apply on my own or take proxy GST from Amazon?
I think this was addressed by
Ms. Parul.
Yeah. She addressed it as well. I think so. For the sake of consistency, we'll wait for her to respond on this.
There is two question for Ms. Parul. One is, can we claim ITC on fire fighting equipment?
Is this for a manufacturing unit of yours or for a service unit? I'm just chipping in. Participant can clarify. Is it for a services related business output or for manufacturing or trading? What is it for? I mean,
Ajit, could you extend your question? Our next question is one rental property owner not paid GST, not filed GST return. Suggest any legal action in GST we can take.
हेलो
हेलो
यस अक्षत हाँ जी आप कुछ क्वेश्चन पूछ रहे हैं
हाँ we have two questions for you. One is
Yeah.
can we claim ITC on firefighting equipment?
Need to check on firefighting what typical equipment
This is
मतलब
not
as this we are asking when we ask about the question ITC on firefighting equipment, then are we asking as a vendor, are we asking as a manufacturer, or are we asking as a company which has brought those firefighting equipment?
I think as a company he is asking for that.
Or like as a corporate for which it is like a fixed asset. Is the question relating to that?
Ajit ji, could you elaborate your question, or otherwise after the webinar, when we share the contact details of the speakers, you just reach out to Ms. Parul. She will answer your query and you can avail their consulting services as well.
Yeah. So as such, the ITC is available on a firefighting equipment if you use it as equipment in your business. But I don't know from which context they are asking. So if as a manufacturer or some installation services or something you're asking, then the answer could be difficult, could be different, because restricted ITC is there. But if you're talking about as equipment in your own business, then yes, it is available.
And there is one more question in a Q&A box. If my company sells B2C and B2B with sales crossing 2.5 lakh in a month, and I want to use Amazon FBA in another state, is it advisable to apply on my own or take proxy GST from Amazon?
I think in case of so the first part you're saying is exceeding 2.5 for both, or it is below 2.5.
Exceeding
So
2.5.
yeah, so my suggestion would be that you go for e-commerce operator GST registration and use the Amazon FBA as a proxy, because that is something which is given by the government to for the ease of doing business. So one must avail of this service, of this avenue under GST registration.
Okay. Thank you very much for your answer, and now I would like to give the official vote of thanks for the session. On behalf of ISFA, I sincerely thank our speaker, Ms. Prachi Arora, Ms. Parul Agrawal, Ms. Anjalika Chopra, and Mr. Puneet Chopra for sharing their valuable insights on recent development in GST. Your expertise has truly enriched our understanding. Thanks to all participants for joining and making the session interactive with your questions and engagements. Special thanks to our knowledge partner Prakash Sachin and company for making this session possible. Heartfelt appreciation to my ISFA team for their hard work in making this webinar successful. We hope the knowledge shared today will help us all stay updated. Thank you very much to all the speakers once
Thank you.
again. And we will see you
Yeah.
in our next webinar soon.